In theory, plummeting home prices and record low interest rates should make buying a home cheaper than renting one, but experts say in some parts of the country it still pays to be a tenant. Despite the incentives to buy, namely that average rates on a 30-year mortgage are now 3.7%, sales of single-family existing homes slipped 1.5% in May from a month earlier, according to data released today by the National Association of Realtors. Experts say the drop, which came during the historical busy spring season, suggests the housing market has a way to go to recover. If anything, the risks of American homeowners are dwindling. The home ownership rate in the U.S. fell slightly from 66% to 65% during the first quarter of 2012, the lowest in 15 years according to the latest data by the U.S. Census. It peaked at just over 69% in 2004. So if you think the economy is getting better, then you better think again. The housing market is a strong indicator of how weak or strong the economy is. Forget about the stock market, it's totally manipulated. You want to know how well the country's doing, follow the housing market. Renters, meanwhile, have more inventory to choose from, as owners who are unable to sell their homes often have no choice but to find tenants, says Dan McHugh, research manager at Harvard University's Joint Center for Housing Studies. The number of single-family homes for rent or being rented grew by 2 million units from 2006 to 2010, according to a JCHS report released this month. And McHugh says the number has likely grown since then. 1/3 of all rentals are single-family homes, he says. That's 33% of all rentals are single-family homes, homes that people have purchased and moved out of and are now renting. On the national level, it is cheaper to buy than rent, according to a March 2012 report by Deutsche Bank, even after taking into account the down payment and property tax. But in some areas, including California and the Northeast, renting remains more affordable than buying. The report identified 13 cities where renting costs less than the after-tax mortgage payment. That's the mortgage expense the owner incurs, along with the mortgage interest deduction they get come tax season. Another thing is that people are not willing to invest in something that they believe might depreciate. The housing market may not have hit bottom yet, and people don't want to buy a house to see it depreciate 10% when they could have got in at a much lower price. And the other thing is people are really still concerned about their jobs. And the people who have jobs and have a little bit of money saved are not sure how secure their jobs are. And they don't want to lose their job and have to be responsible for a mortgage. To be sure, as rent continues to rise, the savings associated with renting could be wiped away. Asking rents are up 2% year over year nationally. They're expected to rise 4% this year, according to Reese, which tracks rental performance data. Still, experts say the growing market for single-family home rentals is benefiting both landlords and renters. For landlords, renting could be a way to generate income or to cover the expense of a property that would otherwise be vacant because they can't sell it. For renters in markets where sale prices remain high, single-family homes offer access to communities with top-ranked school districts, spacious homes, backyards, and private golf courses. The cost of being a renter are often $500 to $1,000 less per month than purchasing. Renters also have the benefit of mobility. They don't have to wait to sell the home to leave, and they're not impacted if its value drops, says Brad Hunter, chief economist at Metrostady, a housing market research and consulting company. And that is a very good point. If you do have a job and you happen to lose that job, if you're renting, you have a little bit more flexibility to find a job within the state, perhaps a little further from where you're living, or you have flexibility to actually move out of the state or even to another country if you're willing to do that, if you're not the owner of a real estate property. So there's a lot of benefits to renting, hence the reason why we see the housing market still struggling. Well, this is one of the reasons why the housing market is still struggling. This reason, of course, dovetails with high unemployment. This is basically the old what comes first, chicken or the egg dilemma. Housing is a great economic stimulator because when people buy houses, the country sells more of the things that go into building and decorating a house, which means companies have to hire people to make or manufacture those things. However, people can't buy the houses unless they have jobs. So what we need are jobs. But how can we have jobs be created if there is not enough demand for more things or additional supplies? So you see, we've come full circle on this problem. And I believe that the U.S. biggest economic problem that will not be easily fixed is the lack of demand for goods and services. Most Americans have the basic things they need to have a decent and comfortable life, especially compared to most countries. When we have money created by bubbles, that's when we spend money on luxuries like the bigger house and the nicer cars, etc. Now that the bubble has burst, most are making do with what they have or even downsizing in some cases. And I believe the demand required to stimulate the U.S. economy has to come from abroad to satisfy needs in developing countries. However, the problem with that is that because of our tax laws, regulations, and still high standard of living relative to other countries, we cannot produce those goods as economically as other countries. So it is not likely that those jobs will come here to the U.S. In other words, now that there is truly a global economy, there is now truly a bubble in our standard of living in comparison to other countries in the world. Many of our big corporations are taking advantage of cheap labor and products abroad to positively affect their bottom line in terms of revenue. Consequently, you may see their stock share prices increase, and this is one of the reasons why the U.S. stock market seems to do well, even though the economy is doing poorly. This is why the stock market is a very poor domestic economic indicator. Keep track of our real estate market if you want to get a better understanding of how well or bad things are getting here at home. Thanks for watching. Peace and love.